Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, the number one multifamily podcast on iTunes. Here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
Number 7 in real estate, number 3 in apartments podcast. I'm doing good, Mr. Stenziano. How you doing?
Getting down to the nitty-gritty. Doing
That's
great.
Right.
Always making it happen. Today's guest is Kelly Thomas. Kelly is a client executive with TIS Insurance Service. Upon graduating from the University of Tennessee, Kelly became the fourth-generation Thomas to work for TIS. Kelly has maintained several roles at TIS starting at the age of 12. Wow. Today he specializes in commercial insurance and provides tailor-made risk management solutions to many businesses across the eastern U.S. That's a tongue twister. Not sure I fully understand that, but we'll get into it. You have to do some educating there, Kelly. So without further ado,
Sure.
Kelly, welcome to the show.
Thank you all for having me. Honored to be here.
Our pleasure. And just to throw a disclaimer out there, we are clients of TIS, and just want to be very transparent with everyone. So why don't you tell us about your insurance background and how you got started?
Jake, Gino, thank you again for having me. I'm honored to be here. My great-grandfather, Norman Thomas, actually founded TIS in 1945. So insurance in general has pretty much been in my DNA my entire life. Around the age of 12, like you said, I actually started working in the mailroom and have held various different positions since then and until now. And now I'm in a sales position. And so, I've spent a lot of time working with my grandfather, Bill Thomas, who's chairman of the board here. I work with him on many of his accounts, and he works with me on many of mine. And so he's been an outstanding mentor to me. And so just continuing to learn the business, and we thank you all for the great relationship. We value it very highly.
Well, this brings up an interesting question for me then. Are we a client of yours or a client of Bill's then? I never asked that question.
That's funny. You are a client of mine, but
okay.
Bill and I work very closely together.
All right.
On your accounts. Very important to us.
Very cool. Very cool. Why don't you tell us a horror story of two since you've been in the business and how that played out?
Okay. There was one specific incident that stood out to me as I was studying this over the weekend. We're honored to provide the coverage for a very large retailer here in town. And we were meeting with this retailer over a series of a couple months, actually, regarding the cyber liability coverage, which, by the way, cyber liability is kind of one of the newer coverages in the insurance industry, and I think that it'll end up being one of the key coverages for any company. But anyway, we were sitting down with them over a various number of meetings, and they basically were trying to determine whether or not they saw the need for this insurance. And basically what the cyber liability does is cover you for any costs that are associated with the cleanup of a hack. So in many states, you're required to notify anybody that's information had been exposed due to this hack, and there's just multiple costs associated with it. For example,
some of the costs, what are they?
Sure. That would be really a big one right there. The cost to notify all these people and provide the credit monitoring to them for an extended period of time. And each state has a different requirement on that. Some may be a year, some may be 2 years. But that's certainly a significant one. Secondly, I think that most people probably prefer to hire an attorney to tell them exactly what they need to do from there. And there's specialists in this role. And of course, that, like any lawyer fee, can be extraordinary. And there's other costs that can be associated with it. For example, reputational damage that you have to, increase advertising or marketing to try to, build back your reputation as a solid company that people trust and want to do business with. So they estimate that per every person that you have all this information on, this can be your employees, this can be your clients, et cetera, they estimate that it can be up to $35 a year to cover all these costs. That's kind of just a random number, but that's kind of what they've figured out. And so if you've got, say you've got 100,000 clients and different information on any of them, you're looking at a significant, expense potential with a breach. So it's a very important coverage, and one that I think in the real estate industry, everyone should at least consider because, take for example, an apartment owner, you're going to have information on all of your tenants, all of your employees that can be at risk to these breaches and hacks that are nowadays, it seems to me, not really a matter of if you get hacked, just a matter of when.
And do you ever even, sometimes you probably don't even know.
I think you're exactly right on that. I think that a lot of times there could be a hacker in your system and not know and be taking advantage of that information. So the coverage, it also provides the insurance company will provide kind of a set of things to do if you are breached, which obviously a lot of us would not know, including myself.
Basically, a kind of a protocol. If this happens, this is what you do, right?
That's exactly right. So I think overall, anyway, back to the story. Sorry, we got off track
that's
there.
All right,
but
man. It's
horror
it's
story.
Different, the world's changing.
It is changing. So they were going back and forth on whether they needed this. They had the IT guy in there that was, of course, saying, "Hey, we're pretty well locked up here." Blah blah blah. And so of course, we just want to provide a recommendation to provide the coverage. And if they didn't want to buy it, they didn't want to buy it. But we always advise our clients that they should carry it. And so we went home that day. I think it was a Wednesday, and we got a call on Thursday of that week, and they had been hit. And so this company's got thousands of employees, and what happened was, the CFO received an email from the CEO of this company saying, "Send me a list of all of our employees, all of their salaries, all of their social security numbers, addresses, all this information." And so he typed it up and sent it, and they passed each other in the hall. And the CFO goes, "Hey, I sent you that list." And the CEO said, "What list?" And so
such an odd request too. Like just being in business. Why would you want that, right?
Yeah, and not only that, you really would not feel. I wouldn't feel very comfortable sending it in the first place.
Yeah.
Just because it was an odd request, but what had happened was these hackers get in and they create an email address that's like very very similar to the one they're trying to imitate. It could be Jake Stenziano, but it would, instead of an E after T, they'd use an I or something of that sort.
Yeah.
And
there's enough vowels in that name to get that one, crossed up pretty quick, right?
Absolutely, no doubt about that. So anyway, so we worked with them very closely with the insurance company that was quoting. We work with a broker out of Atlanta, and we worked very closely with him to provide the lawyer to them that they would use to figure all this out. And unfortunately, the coverage wasn't in place because they hadn't purchased it. But it's a good example. You know when it can happen. You never know how vast the impact can be. And unfortunately, I think that they found that it was very expensive.
I'm sure. So what niches of real estate do you serve, and do you have a focus?
Good question. I've worked in several different sectors in real estate. Been fortunate to, obviously, multifamily residential housing has been. I've spent a significant amount of time on. But other than that, I've worked in commercial real estate. TIS is fortunate enough to insure a lot of developers of type. So owning all these shopping centers, big warehouses, those types of things. And lastly, single family dwellings. Had some experience in that. And, good question, because they are not at all the same from an insurance standpoint. The policy design is a lot different. So, for example, for an apartment owner, your general liability could be based on your number of units, could be one of the class codes. For a lessor of sorts in commercial real estate, a lot of different types of policy design differences. And I really, really enjoy working in real estate. I think that we have the expertise and the relationship with carriers to be really valuable to our real estate clients.
Yeah, and I just think it's an important point for the listeners out there, because if you're dealing with somebody that doesn't really have experience in multifamily and writing policies for multifamily insurance, there's differences to your point. For example, it's not, you're not going to have a business interruption. You're going to have loss of rents, little things like that, where you're going to want someone that has a lot of experience doing that, so they know how to properly set up the policy. So I think it's just key making sure you're getting people on the team that are experts in that specific niche.
Absolutely. And to your point, and you all are outstanding about this as a client, a lot of times when you're trying, you're working to develop your insurance program and you're working with whoever, a lot of times you'll find, and I think this is true in every industry, that your cheapest price is if that's your goal in insurance, just to cut your cost as low as possible, which we all want to do, you may find that there's going to be some key issues in your policy that you want to watch out for.
Well, let's talk about that, because we were looking at the Middle Oak policy, and I think if there was a hailstorm, it was going to be, we were going to have a $10,000 deductible on each building, and that's one of the reasons we decided against that policy. So there's certain things like that are important, where the face value may look less expensive, but if an event actually occurred, you're going to be in some trouble.
Yeah, we always say you will never remember saving, say, $1,000 a year in the event of a claim. You won't even think about what you're paying really, but you'll expect to be paid in full.
Right.
And that's a good point. I think that a lot of times you can see a deductible broken down by peril. So, for example, you may have, like you said, a hail deductible that's much higher than your fire deductible. Mm-hmm. And that's a certain thing. And another thing I think that you will run into sometimes is whether or not your policy is written on a replacement cost or actual cash value basis. That's kind of a broad.
Well, talk about that and why that's important.
Sure. Okay. So there's two types of valuations that the insurance companies care about. One is replacement cost, and that literally is just saying how much would it cost you to rebuild this building in today's money. If you had a total loss. And that a lot of times it's tough to determine exactly what that can be, but typically your insurance company will come to an agreement with you on what that is and doesn't cause an issue. Where your issue is, if they are to write the value on the second type of valuation, which would be actual cash value, which is replacement cost minus depreciation, that's where you run into some real issues, particularly if you own some older properties. We've got some properties that aren't old, but could be considered older when you take out depreciation. For example, a building built in 1980, depending on what type of depreciation you're looking at, it could be a substantial hit in the time of claim. Yeah. So insurance companies do not care. This is important to understand. Insurance companies do not care at all about market value. It creates a lot of confusion when we talk about how much do we need to have this building insured for. The market value is completely irrelevant. So, you're either dealing with replacement cost or actual cash value. And in my mind, I would never, ever purchase an actual cash value property policy.
Yeah, no, that sounds about right. Do you ever come across potential deals for investors? Because you must have a lot of clients out there, and have you ever kind of put folks together?
That's a good question. I do work with a lot of different people in the industry, and it seems to me you and I have talked there's a lot of people wanting to buy.
Yeah. Yeah.
So sometimes hear about a seller and those opportunities, but it seems to me, and I think it's encouraging for the multifamily industry for sure, that people are recognizing that this industry is going to be a really, really profitable one. And I think that people, as I watch as an outsider, it seems to me people are going to start moving into apartments. I think the younger generation, instead of saying, "Hey, my dream's to own a home," it may be my dreams to live in a high-rise downtown, sort of thing. So, to answer your question, I unfortunately don't hear about a lot of deals, a lot of potential deals, but I certainly recognize that there's a lot of buyers.
I think Gino's trying to turn you into a bird dog here. I don't know.
Right.
Well, I've been sitting back here nice and calm. The Skype dropped on me. I've been listening to a great conversation here. It's just having that team member and saying, "Hey, Kelly, do you have anything in the pipeline? Do you have another real estate broker you can introduce me to? Do you have an attorney you can introduce me to? Maybe a property manager?" That's not maybe getting a deal directly, but that's, inviting me to meet somebody indirectly. So that's another way that, you can use your insurance broker to make connections in the market.
Yeah, absolutely. That's a great point, and I think that that's what I love about my job, is that networking your clients can create so much value as an insurance agent, but just it makes things so appealing. For example, even a competitor can oftentimes be a friendly relationship. If I introduce you to, say, another apartment complex owner that we insure, and perhaps deals could come out of that. So I think that your insurance agent can absolutely be a good reference, and your insurance agent should want to be a good reference point, because it adds more value to your relationship than just being the account manager, basically. So.
Well, this is the new economy. So I think in every industry you have to learn how to create the value. So it's not just a numbers game. Everyone worries about the price, but if you create a ton of value, people won't worry about as much as price. They'll be worrying about the value. So that you won't become a commodity. Kelly, once you become a commodity, it's all based on price. So you want to, I guess, steer away clear from that.
Absolutely. That is, I think, like you said, in the world. Seems to me that you're never going to pay a cheap price for the best products. Just it's not the way the world works. So you have to determine whether or not you value a product high enough to pay the additional price for. And I think that certainly in the insurance world, like I said, I've never seen a situation where I think a cheaper product has been of value at the time of the claim.
I don't know if you guys had mentioned this. I dropped off for a couple of minutes, but I wanted to touch real quick on renters insurance and how us as landlords can pitch it or sell it to our potential renters, because I think it's invaluable. I think everyone should have renters insurance, but try to tell somebody who's making $10 an hour, hey, you really need to spend $15 a month or $20 a month on this insurance. They don't connect the dots sometimes. How can we really portray it to them and say, hey, listen, this is a great value proposition for you?
Good question, and I'm like you, Gino. Honestly, to me, as a renter, by the way, I think that it's an almost no-brainer. A lot of landlords these days are requiring the insurance and to all of their tenants, and so that's one thing. But on renters insurance, here's what's so valuable about it. The cost of renter's insurance in any situation is extraordinarily cheap. The rate is very, very low. So, for example, personally, I carry a renter's policy with $50,000 of coverage on my contents in my apartment. Whether or not I have that, probably even not. But the rate's so low, I say, why wouldn't I? Once you add up say you had a total loss, all your clothes and electronics and such could probably add up to that. So $50,000 of contents coverage, $500,000 of liability coverage. And people say, I don't have an extraordinary liability exposure in my apartment. I never have people over, et cetera, et cetera. But what people don't understand is this is covering you anywhere in the United States, Canada, and Puerto Rico for your negligence for bodily injury or property damage, not just premises liability. It adds the protection to the individual that's purchasing the policy anywhere in the country and the Canada and Puerto Rico. So that's an important part of. I think that if you ask somebody where is your just general liability coverage to a renter, a lot of times they'd say, I don't know. We've got my car insurance. Well, that's only applicable if you're using your vehicle. So you've got your contents coverage, your liability coverage, which is so important for anyone, and then your medical payments coverage, which means if somebody came in regardless of negligent and was injured on your premises, it would pick up their medical bills. You'll see $5,000 or $10,000 on medical pay, and the cost it can be like you said, it could be $200 or $300 a year, and to me, particularly on the liability portion, if I can pick up that type of protection for $200 or $300 a year, I just think that it's an outstanding, cost-efficient value. I think that it's important, and I think for landlords, this is important. I think it makes the tenant have a little skin in the game. For example, a lot of insurance companies are real worried about the fire exposure in apartments because the history has shown that these things will burn. And when you have a renter's policy, people want to take care of their things. People want to just respect the entire facility, and I think that can kind of add value to the landlord just to require that because the cost is so incredibly.
That's why I always wonder why these insurance companies don't offer discounts if you mandate renter's insurance. I always thought that would be such a no-brainer because it seems it insulates them. But
right, agree. I think that's a smart point, and I think that as a landlord, you also don't want to worry about. Say you did have a big fire, and whether or not we're negligent. My thought is I'm pretty positive if I'm a landlord that owns an apartment complex that burns, that they're going to be coming to me and saying, "What about all that stuff that just burned? You going to pay for it?" Mm-hmm. And we're saying, "Well, no, we don't really. We're not responsible for the contents." And you can lay that out in your lease. But I think that even in a lease, a good enough attorney can find a way to make that a problem for you, in my opinion.
But if they have renter's insurance, you're not worrying about it.
Sure, exactly, And I think that they wouldn't be coming to you if they had the renter's insurance. They would know where to go,
right?
And they would understand their responsibility to carry that coverage. People skim through a lease, say, okay, the insurance, we're not responsible for contents coverage. Well, okay, flip through the lease, but if you say you're required to purchase the renter's policy, you get a certificate of insurance from them. At the time of a fire, you say, here's your renter's insurance. That'll pick up your property coverage. So I think
I like it. It's a good argument. Can you tell us about your first deal in insurance and what you learned from that?
Sure. My first deal, I actually got my insurance license in 2014 while I was finishing up college, and I was working with Bill kind of directly. He was kind of mentoring me into the industry, and we called on I guess it would have been a referral. Somebody referred us to a very nice funeral home here in Knoxville. And funny story about the funeral home: the lady that owns the property and owns the funeral home had the same last name as Bill's. Thomas is my grandfather's first client in 1965 or something. So it kind of all came full circle. But it was a great experience because that was the first time that I worked from the beginning, where there's this process in insurance sales and any type of sales, but it's the first time that I've walked into the beginning introductory stage. Then you gather the information, try to build this relationship. And that was the first experience that I had going full through. But
you closed it though.
We did close it, and still a valuable client today.
Good.
value that relationship, and they've been great. So it was a good learning experience for sure.
What advice do you have for multifamily investors when getting insurance?
When getting insurance or just in general? I think, well, I'll do both. I kind of thought about this. And if from an insurance standpoint, I think that you should just learn to value the more expensive coverages. For example, like we
spoken like a true salesman, Kelly.
Yeah,
just messing with you.
That's right. I just think that you cannot fall to the pressures of buying these cheap coverages because you're going to have a claim.
Sure.
I mean, in real estate, just in general, I think that the chances of having a claim are just great. Mm-hmm. We hope, knock on wood, hopefully we never have a claim. But I think that if you can really get down in the nitty gritty of your policy and ask your insurance agent, is this the best protection you can offer me? Are there any parts of this policy that you wouldn't, buy for yourself? I think that you can find that paying a little bit of additional premium for a better product can be extraordinarily valuable to you and your operation.
Save you money in the long term, right?
Absolutely.
Yeah.
And just avoiding terrible claims situations, knowing that you are purchasing the best protection that you can have, it makes your life so much easier. In the event of a claim, you will never, ever think about the X number of dollars.
Helps you sleep at night, right?
Absolutely, it does. And so, as an insurance advisor, I always try to explain to people the importance of that. And I think that, if you are going to go into multifamily or any type of real estate investing, the insurance is such an important portion. It's a big portion. I think, you'll find the cost will be a big high number on your expense list. In fact, a lot of times insurance will be the number 2 behind payroll or your cost of goods sold or something like that. So it's an extraordinary investment, but it can provide so much value to you, particularly when you have the policy designed in the appropriate fashion.
Kelly, I can speak to this because about 4.5 years ago, I had a fire at my restaurant, and my insurance agent, the broker, was down the street from me. So it was a small fire, and it knocked us out for 9 weeks, which should have been less. But by the time the paperwork and all and getting everybody out there, it happened in between a hurricane. And you know what? Was my insurance cheap? No, it was reasonably priced. But the service that I got from my insurance broker, getting the checks cut, getting the business interruption done, being able to pay the vendors, being able to ask them any questions, keep the ball rolling is invaluable. So it's unfortunate that stuff like this has to happen to you to figure out how powerful and how much value an insurance broker can happen. But I'm here to say to everyone listening to the call, it is invaluable. Don't let it happen to you. Be prepared. That's all I can say, because I had a small little claim, and $300,000 later and 9 weeks later, I was able to keep my employees. I was able to pay them. I was able to, those rents upstairs that were coming in also. It was actually a pretty smooth transition in a hectic part of my life. So, I really attribute that to my broker. And you know what? I've been with them for 20 years. And every now and again, Jake likes to call it the expense creep. Policies do go up a little bit. You start shopping it around and you're like, you know what, they're a little bit more expensive. But I always go back to the fact that they gave me such tremendous value and they were there for me when it happened that, that's why I stick with them.
Don't underinsure, essentially, right? Because it's going to bite you in the long run.
And that's another good talking point here as a recommendation when you're reviewing a proposal or a policy. If we've got a building that we own for $1 million, the replacement cost is say roughly $1 million, but I say, you know what, I only want to pay to insure that thing to $200,000. There's a provision in the insurance policy called coinsurance, and your coinsurance will be a percentage. A lot of times you'll see 80, 90, 100%, and whatever that percentage is what the insurance company is requiring you to insure. That percentage of the replacement cost. So, for example, if we have $1 million replacement cost building and a 90% coinsurance, we're required to provide $900,000 of coverage on that building. If you don't, what happens is at the time of the claim, you can be hit with a coinsurance penalty, and it basically says what you did carry over what you should carry times the amount of your loss. And so in that case, you should have carried $900,000, 90% of the million. And if you only carried a $200,000 limit on that building, they'd only pay 2/9 of your loss. So it can put you in a horrendous situation, and just another area where people trying to cut costs, would say let's only put 500 on that thing. Well, you can be in a really bad situation at the time of claim. You better be gambling that you don't have a claim, because if you're going to be out on that. So, I always try to recommend putting on an insurance policy what's called the agreed amount endorsement, and this eliminates coinsurance. So it says we go to our insurance company and say, here's what we're going to insure for them. They will go out and do the inspection to make sure that we're not, creating a big scam virtually. But it basically says that the insurance companies and the insured agree in the replacement costs that it's used, so you don't get in that coinsurance penalty. But the agreed amount endorsement can cost 2% extra. So it's just a perfect example. I mean, of the value. And I think personally, that adds great value. I don't ever have to worry about being underinsured.
Yeah.
So that's an important part too.
So how have you seen the industry change since you got into it?
I actually think it's changed a lot. When I got into it, I think that I actually started dealing.
Well, I guess you've been in since you were 12. I was thinking since
but let's
not
say,
the mailroom. Let's say the last 5 years.
Right. Yeah, the mailroom's had an extraordinary upgrade.
Excellent.
But no, I probably would say 5 to 6 years ago, I started actually getting into the true insurance world and started to learn, still learning every day. But I think what we've seen in the last, say, 10 years really is the insurance market has become what they call very soft. There's a soft market and a hard market. And in a soft market, and this all goes back to pricing, but in a soft market, the insurance companies are all very aggressive on pricing. And a lot of times you'll find that companies that sometimes wouldn't want to offer coverage are offering coverage competitively because the insurance market's really just soft. In a hard market, alternatively, you could expect rate increases on a yearly basis, and you could expect to have a hard time finding a carrier to provide coverage other than the one you may be with. So 10 years ago, if I've got you, just say with Travelers Insurance Company, you may never move from Travelers, and you may expect a 3 to 5% increase yearly. Now we see it all the time that we're having rate decreases over year basis, and so that makes us happy too. I mean, then your revenue, of course, goes down with a rate decrease, but you have to. At the end of the day, we're responsible for trying to find the best price with the best product. So that combination, you'd rather keep the client and lose a couple cents on your rate than lose the client in total.
So you're seeing a soft market right now.
Very soft market, and they honestly think that I think the industry would predict that it'll stay soft for a long time.
The interesting thing about that is looking at the real estate world that we're in right now, you have low interest rates and you have a soft insurance market. So that's making it a good place to be as an owner. But the thing is, people can't get too aggressive because if you start to overpay for these buildings, right? And say you have a 10-year term on your interest, and you get out 10 years, and all of a sudden rates are 9%, and you have a hard insurance market, that could really create a kind of a snowball effect that you got to watch out for. So I just really remind people why it's so important to buy right and get into these things at a number that makes sense. Because if you start overpaying now, and you say the insurance market changes and your interest rates start to go up, you're going to put yourself in a very stressful situation. So it's always important to be prudent and make sure you're buying right on the front end or walk away from it, because it's not worth it to get yourself in a position 5 to 10 years from now that you're not going to be able to withstand. So
sure. It's ironic because in insurance school, when you go through all these training and licensing classes, etc., they always taught you that interest rates and insurance rates are inverse. And it makes sense because when you pay your premiums, not only are they, reserving a big portion of that cost to pay claims, but they go back and invest that money. That's how the whole concept works. So if interest rates are low, they've got to make up for that with the higher rates. In a high interest market, their returns are much better. So they can offer the lower rates, but we're in a really unique market where both are staying low. To be honest with you, I'm not exactly sure why it's not going as the model per se, but it's definitely unique.
Something's backwards here.
Yeah. Guys, I think it has a lot to do with the internet and the disruptive value of the internet and how you say it's a soft market. Everyone's out there on the internet shopping everything. So, Kelly, before they come to you or before they come to us as renters, they know exactly what they're paying for a policy. They know all the ins and outs. And it's great to have a client or a tenant who's informed because they know that they're getting a good deal. But at the same time, that competition is what creates the price, coming down on a product.
I agree, and I think that insurance companies, for the most part, I think in order for insurance rates to start creeping up again significantly on an industry-wide basis, I think a lot of times you think we need to have God forbid it, in order for that to happen, we would need to have a big event. For example, in Tennessee, in 2000. It would have been April 27th, 2011. We had a hailstorm. I think that they said they replaced 30,000 roofs in Knoxville or something just ridiculous. So all of these companies really took an enormous hit if they were providing the coverage in Tennessee on this property insurance. And so we did see some companies change things a little bit and say, like, for example, when you have multiple buildings, some companies are worried about providing a per occurrence deductible. They want to throw the per building deductible.
That's where I was talking about Middle Oak earlier.
Right, exactly. Yeah. So we just had we just had a horrendous event in Sevierville, Tennessee, in Gatlinburg, the fires, and I think that it'll be interesting.
I didn't even think about that. You must have been very busy.
We had a lot of clients up there that it's been a busy time, but it's a devastating event, and it'll be interesting. I know for a fact that one company we represent had a $300 million loss in Gatlinburg, Tennessee. So it'll really be interesting to see in the next year or so if that event is considered big enough to have maybe not an industry-wide change, but perhaps a regional carrier increase. So it'll be interesting to see.
Man, that's significant. Starting to wind this thing down, but I want to hear your best insurance tip for the listeners.
I think that, like I said, really getting into the process of the insurance with your agent, having a relationship with your agent. If you can get down to the nitty-gritty, all of your different day-to-day things. For example, Jake, we work together a lot on the recommendations from the insurance companies, and we drill into those and look at those specifically and wanted to improve in those types of areas. I think that you all have great stance on that. Instead of saying, why are we having to do all this and that, you say, I want to do this and that, the reputation of my property, if you will. So I think that being meticulous in all facets of your operation can be a great value to you as a real estate owner.
What's the best way for listeners to get a hold of you?
I'm available literally 24/7, 365 on
Kelly
my
24/7 Thomas.
That's right. I try to pride myself on being incredibly responsive, and I think that that is one thing that you should expect out of your insurance agent. So many times, delays in responsiveness while the insurance agent may be trying to solve problems in the background can really create an issue and a breakdown between your relationship and your insurance program. So even if there's problems, you always want to be, I try to always be incredibly responsive and say, hey, we've got a problem. And so bottom line being, I do work all day, every day, and always can reach people on my cell phone. Which would you want me to give my cell phone or? Hey
man, it's up to you. You're the salesman
right.
out there.
Well,
it's totally up to you.
I want to give my cell phone. I didn't know if you all had any policies on.
No. This is the difference. We like sales on this show, so it's completely fine. You can give your cell phone, street address, email, whatever you want to do, man. This is your opportunity.
Picture your dog.
Yeah, sure. My direct line at the office is 865-470-3722. And my email is ktomas@tisins.com. And I welcome anybody that would like for us to provide a review of your current insurance. It's never a binding thing, but I do think that we have the expertise to tell you if there's any issues in the policy, in our opinion. And I would love to have the opportunity to speak with anyone, anywhere, really. TIS is licensed in all 50 states, and we do business across the country. So would love to have the opportunity to talk to any of you all about your insurance, or if you just have any questions, please feel free to reach out.
What's the website, Kelly?
The website is www.tisins.com.
Very good.
So that is Kelly's unique selling proposition, 24/7, 365. That's the value right there, Jake. Right?
We're going to have to give him a new Twitter account, Kelly247.
That's right.
that could get some interesting people looking into it, though, so we got to be careful with that kind of name.
Right.
So. Well, Kelly, hey, it's been great having you on the show. To the listeners out there, sorry, we had a few little issues with Skype today, but do appreciate everybody. And if you found value in the show, please go on to iTunes, subscribe, and give us a review. And guys, appreciate the time.
Thanks,
Kelly.
Gino and Jake, both for having me. I've really enjoyed it.
We trust that you enjoy the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.